A Cyprus company can be registered quickly, but speed is not substance. A certificate of incorporation proves that a company exists. It doesn't prove where the company is actually managed, who makes the decision, where the records are kept, or whether the business can survive a bank review, tax review, or investor due diligence. That is the point many founders miss. Registration opens the file, substance decides whether the file holds together.
Imagine two founders, both register a Cyprus Limited. The first founder treats it as a document: registered address, nominee-style administration, contracts signed from another country, no board logic, no local records beyond the minimum. The second founder treats it as an operating structure. Decisions are documented, contracts are approved properly, accounting records are maintained, the director understands the business, and the bank can see how money moves. On paper, both companies may look similar. Under review, they are completely different. Substance is not one magic document. It is the evidence that the company is more than a legal shell. For Cyprus, the practical substance conversation usually starts with management and control, where key business decisions are made, who makes them, whether board decisions are documented, and whether the company's actual operations match the tax and corporate story. There is also the formal corporate layer. A private Cyprus company must have at least one director and one secretary. Directors are legally responsible for the management of the company, accounting books, tax returns, and tax payments. So the director is not decoration. The director is part of the company's legal reality. Cyprus also requires a registered office in the Republic of Cyprus, and the official guidance is clear. It must not be a mailbox. That address is where official notices are sent and where company registers and other documents are maintained. But founders should not confuse an address with operational presence. A registered office is the legal minimum. Substance asks a wider question. Does the company have a practical Cyprus footprint that matches the business it claims to run? For a small IT company, that may not mean a large office. But it should mean a credible setup: records, communication, decision-making process, service providers, banking logic, and a real explanation of how the business operates. The phrase management and control sounds technical, but the idea is simple. If the company claims to be managed from Cyprus, then key decisions should not only happen in someone's head, on WhatsApp, or in another country. There should be a trace. Board meetings and contract approvals, banking authorization, commercial decisions, and accounting support with a clear director role. This is especially important when the company wants treaty access, banking credibility, or investor confidence, or simply a clean tax residency position. The question is not whether you can explain the structure in a call. The question is whether the documents explain it without you in the room.
Substance is not only about the tax authority. Banks care about it, accountants care about it, auditors care about, and investors care about it. A bank may ask who controls the company, where the business is managed, why the money flows through Cyprus, who the clients are, where contractors are located, and whether the structure makes commercial sense. If the answer is because Cyprus has good tax rules, that is not enough. The stronger answer is because Cyprus is where the company's legal, operational, and financial logic actually fits together.
There is nothing wrong with choosing Cyprus because the tax system is attractive. That is normal planning. The problem starts when the structure exists only for the tax result and the operational reality does not support it. Normal optimization means the company has a business reason, documented decisions, real records, accounting discipline, and a structure that can be explained. Risk begins when the company has a Cyprus label but no Cyprus logic, no meaningful management, no real decision trail, no local records beyond formalities, no commercial explanation for why the structure exists. That is the line founders need to understand.
So what should a founder actually do after registering a Cyprus company? Think in 3 layers. First, corporate basics. director, secretary, registered office, statutory records, annual filings. Second, management evidence, board decisions, contracts, payment approvals, accounting trail, tax file. Third, operational reality, where the team works, where clients are served, where IP is developed, where banking and reporting are controlled. If these three layers tell the same story, Cyprus becomes much stronger. If they contradict each other, registration alone will not protect the structure. Cyprus can still be a strong jurisdiction for founders, but the stronger version of Cyprus is not the paper version. It is the version where the company has management, records, local logic, banking clarity, and a structure that survives review. That is why substance is not an annoying extra step after registration. It is what makes the registration useful. A Cyprus company is not a checkbox. It is a story, and the documents need to tell that story clearly.